the key thing is from that situation, the bottom line for any of these type of events is, will there be a disruption in supply? And typically the market's becoming very much immune to these. It's very unlikely and very unlikely to be enduring. So markets, I'm sensing, are just looking for an opportunity to sell. So for instance, right now, you mentioned WTI crude oil, $63 a barrel. Last year's low is 65. So maybe gets up to that year low. So that shows an overwhelming bearish market, excessive supply and declining demand. And when's the last time you've seen upward demand estimate revision on a global basis? So it's a bear market. So these type of things, markets becoming immune to. It needs something significant to keep it higher. Otherwise, responsive sellers are probably going to win.
To your mind, what's the biggest catalyst for the oil market right now? I mean, we know that OPEC Plus had that smaller than anticipated promise to pump more. We've got, China stockpiling oil amidst concerns. What's the number one thing, to your mind, that's driving the market?
So the bottom line, Alexis, is the big pump in prices to the peak in 2022. That shifted the world order. It's not just crude oil. It brought on that excess of supply. Remember, it's a high elastic commodity, and it shifted the world over towards EVs and to reduce demand. Certainly in China, demand and imports are declining. And now we're all heading lower. It's not just crude oil. It's happening in natural gas, in the grains and corn and soybeans and wheat. So they're all in that same stage of heading towards that low price cure. And what's going to stop it? The key thing I'm worried about is what might accelerate these downward trends. It's the time of year you get volatility in the stock market. The VIX is at 15. That's very low. The average this year is 20. If it just pops up a little bit, we get a little decline in the stock market. That's a significant deflationary force in commodities. So they need something to keep them elevated. The stock market has been elevated. So if the stock market drops a little bit for this normal September, October volatility, these commodities are already showing that deflation. It's very much indicative of what's happening in China. The key thing I like to mention is that 10-year note yield in China today is 1.8%. In the U.S., it's around 4%.
So, Mike, clearly the strike here by Israel is going to have a negative impact on whatever ceasefire conversations were taking place between Israel and Hamas. What bearing might that have on how OPEC Plus moves forward? Alexis mentioned that OPEC Plus agreed to modestly increase production. Is this something that they will fold in the geopolitical situation that is now rapidly changing before our eyes?
They can, but we see what's happened with OPEC. They really curtailed production a couple of years ago, and they're just starting to bring that back on. They still have excess supply, and they're bringing that back on amid the global economic demand pull situation declining as they faced, more and more imports from the U.S. And they seem to have a bit of an agreement with Mr. Trump that we want lower oil prices. So there could be a shift there. I think it's very unlikely. Even if they shifted to cutting back supply, the market will just wait and say, thank you very much, and give me a rally to sell so I can bring on more of that supply from the U.S. and Brazil and Guyana. You see the trend there? It's just they don't have as much power anymore, and they're in that stage right now of adding to supply after taking it out. So the trend is downward in prices, increasing supply. And this event today, it'd have to be something very significant, I think, to shift their mantra of adding supply to the market.